All right. Good morning, everybody. There's a lot of data this week for being a short week and the last week of March. Just a second. And get rid of some trash. So, yeah, we got a lot of Fed speakers, and we're going to get some pushback on whether or not there might or might not be a coordinated cut in July. That'd be a global coordinated cut. That'd be a pretty interesting impact if that's what we get. And Bitcoin's on the move this morning. On FX Street, there was a interesting discussion about iron ore as a proxy for the Chinese recovery. It's worth kind of maybe digging in a little deeper to that too. We're red around the world mostly. Japan's up 0.75%, but everything else down. The NASDAQ down the most, with Hong Kong barely down more than a quarter, the Dow right behind that just under a quarter, and the small caps down the least. Looking at Market Watch, we got a lot of Fed speakers, a little bit of housing data, which, we talked a bit about that last week. But otherwise, on this economic calendar, it's all Fed's talk. Look at something like FX Street, they tend to do a better job of getting everything everywhere, as opposed to Market Watch, which just does the US. A lot of auctions this afternoon. They're all in the front end, so you might want to take a look at IRX, kind of get a feel for that on a daily, weekly, and monthly chart. And the volume is a little light this morning. We're sitting just under 70,000. It's not too light, but we don't see any hedging going on up here. And we're selling off a little bit. Typically when markets sell off, we get a higher volume than breakouts and rallies. So seeing the market moving to this lower ADR and having a low volume, it's a little off. Something's not quite right there. It's nothing to be overly concerned with. Just keep your eye on the Fed speakers through the morning. We're not really expecting any kind of shock at all. And, watch the clock. It's a short week because we're off Friday. So if you haven't heard that yet, well, now you have. Pretty sure that the futures market will be open for at least the first part of the day, but don't quote me on that because I didn't look. I'm not one to try to squeeze, every little bit of trading into the day. So I'm not going to mess around with Friday. We are underneath the daily pivot point. We have not hit it yet today, so that makes it an MDP. If we can keep that, then it will count tomorrow. It doesn't count today. It's not my strategy, and I don't trade with it anyways. I just use it for analysis. So if you want to know more about an MDP, you can just go Google, YouTube. There's plenty of videos. Makes for some decent analysis, and at the very least, it brings in a different perspective, right? So MDP missed daily pivot so far. We had a reasonably tight range on Friday. And if you notice, let's kind of just zoom in there for a minute. I've got my daily pivot point here. It's a purple line. And I added a little math formula that puts these bands around it. And these bands self-adjust. They adjust because of the data that we got previously, right? So on this day, it was using the previous day's data, right? And those bands that I had that day, here's the purple line, there's the bands, right? They were based on the day before that, on and on and on, right? They just kind of are a reflection of the previous day. So even though Friday was a bit of a range day, look at the bands on the daily pivot point this morning. They're not as narrow and constricted as they were on Friday. Now, there's a lot that goes into pivot points. There's a lot of different ones out there. John Person's got one, right? There's Camarilla pivots. There's, oh my gosh, there's just so many different pivot points out there. Most of them start with a basic formula, like high-low close divided by 3, or open high-low close divided by 4. There's really, only a few ways you can get that first initial pivot point. And then how the S levels and R levels get calculated is kind of a completely different discussion. These bands, however, are from an old book that I had dug out some math formulas. So I don't have too much to kind of lay out in the way of these bands, just pointing them out as we go. And if they begin to provide enough information that we're looking forward to using them on a day-to-day basis, much like the ADR levels when I first started using them, then we'll put more effort into it. For now, just kind of pointing out the odd things that I see with them. We are back inside the previous week's close. So we closed on Friday, kind of popped up in the Globex, cut underneath it, and now we're holding steady. Really looks like we're just maintaining VWAP, like reciprocation. Think of your reciprocating saw or jigsaw. Right? It gives you X amount in one direction, X amount in the other direction. We were holding that right up into about 6:30, 6:45. We didn't get that leg back, and instead actually legged down another level. So that's the call out to go to the lower ADR. Of course, if we get there, we're going to expect to pause. There's always 3 things that a market can do, right? It can pause at a pivot point, bounce off that pivot and go back up, or it can cut through the pivot and continue to go lower. A little bit of Captain Obvious, right? It's going to do one of those 3 things. The trick is trying to figure out which of those 3 it's going to do. If we get down to this ADR level and it's pretty late in the day, I don't know, say 10:30, 11 o'clock, it's a pretty common thing to just hang out at that level for the rest of the day. But if we get down to this ADR level before the market even opens at 9:30, then we've got a lot of history that shows we can actually run back up and hit the other side by the end of the day. So when we get down here, if we get down there before 9:30, watch the flows and see if it really looks like we're going to continue to expand lower, or if we're going to flip things around and try to run back up to the other side. It should start with a basing. If we're going to hold the line and or run back up, we'll see basing in usually either one of those scenarios. So at that point, you got the flows, and perhaps you got some price action too that kind of add into that. It's sitting just above a weekly pivot point. Generally speaking, when we're above the weekly, we look for long trades. And when we're below the weekly, we look for short trades. that is a generic statement. And when you have a situation where we've been drifting to the downside back towards a weekly pivot point, there aren't really very many long opportunities to take. So it's not like you're just gonna, knee-jerk reaction go long because we're above a weekly. It's just a broad statement, right? You should be looking for long opportunities when we're above a weekly. And look at price. It's not offering long opportunities, right? It's just continuing to grind its way back down to a weekly pivot. So there's a little bit of, there's sentiment built into that. If we can get through the weekly pivot, then we've got 0 gamma, a 10-day moving average, volatility trigger, the 3-week moving average, and then the full ADR at 52.41. Now, there's nothing down here for previous price action unless we look all the way back to that blowout Wednesday. So one of the things that we can do is put that one day all by itself. We've got a halfback level here. 52.65. If we can cut through this halfback, then we're going to want to focus on the cog line on the lower end of that weekly Wednesday candle, right? So this is a level I would certainly keep on my charts today and then put it on a weekly as well so we can get the rest of the levels. Now it says 52.52, but there's a lot of options levels at 52.50. You're better off just rounding down into that key level. So it's not a surprise, right? 52.50 should already be on your radar. If it's not, put it on there. Not just because it's the measured move, but it's a round number and it's an optionality level. Same thing with 5200, right? Pretty sure Spot Gamma covered those, which I was surprised, pleasantly surprised that they had the founders note out this morning. Seems like a lot of times during the week, we don't have the AM session when we get started. So 52.65 and then 52.50. Those will be some halfback levels when we really start expanding our focus and looking back, in the last week. Now, it's worth noting the CBI and TradingView honestly does a much better job with the CBI than Thinkorswim does. On Thinkorswim, I can't choose all the US markets. I have to pick and choose which market I want to look at. So I've got the NASDAQ here, and it's not the NASDAQ 100, right? It's not the Qs. It's the NASDAQ composite. It's good enough, right? For Thinkorswim, it'll do. But I added this cloud around the CBI. That's a Bollinger Band. And right now, those Bollinger Bands are constricting. I am on a weekly. So, this is a weekly squeeze that is forming. And I added some moving averages, my typical colors. 20 is in green, 10 is in blue, and 50 is in orange. All the moving averages are tangled up with this CVI, this cumulative volume index. And we've got this Bollinger squeeze. So just a little bit of caution, right? Last week, we also had a nice expansion in price, and we got nothing last week. in this thing. So we got some divergence there as well. Now I've shown this on TradingView. Let's see which one we want here. So this is IXIC, which is the NASDAQ composite. And we're looking at that same CVI. Now on TradingView, I could make this CVI show me all US markets, but I laid it against the NASDAQ specifically so that we can use CVI NASDAQ against NASDAQ, right? We didn't really have much of a divergence here. But we're also not seeing on this platform, we're not seeing that squeeze either. So a little bit of a concern. If you are using TradingView, just go to indicators, CVI, there it is right there, cumulative volume index. It's just an indicator, right? Open it up, got nicey NASDAQ, but what I like about it, it's got US total markets. So instead of picking and choosing which one, you can just look at them all. It's really nice. Then benchmark it against something like the S&P. And looking at all markets, we didn't really get any divergence, right? S&P has that move down. CVI has the move down. But that's looking at all the markets, right? So just kind of something to keep your eye on. That Bollinger curl is something that always gets my attention, no matter where I find it. While we're out here on the weekly, we're still a long distance away from that 10-week moving average. But like I showed on the intraday chart, we're still above that 3-week moving average, right? So we don't want to try to buy the dip. We don't have enough of a dip yet. And that's if we're going to maintain this 10-week run. Now on the daily, we did cut that 3-day and we are on our way back towards that 10. All right, 10-day, 30-minute volume profile. We're cutting back through this really shallow area. We moved through it really fast. We didn't really leave much behind. And when we do that, if we fall back into it, we usually fall back through it really fast. And that should bring us back to the point of control, somewhere around that 52.37 area. 52.37, bring it back and look at where the ADR is. Now we're at 52.41 here. So going to need a little bit more than that, which makes sense though. This is a 10-day, 30-minute chart as opposed to, the 5-day, 15-minute chart. This is still what I would be focused on. It's the same measurement that we did already with the weekly chart, 50% levels, all of that. So 50, 52, 52, 65. And then below that back to 52.36 or 52.32. It's a cog line. 70% of all the volume is still down in this lower level, which is why we have the value area high and low still down here. So that run up and all of this volume up here it's nothing compared to what's still down below here. That breakout that we had now needs to be validated. And so far, we're not able to keep it. I will caution, we've seen moves like this before, where an inverse market or another market that correlates with the S&P, that other market hits a resistance level or a support level, and it moves, and then the S&P rebounds and starts working its way back up with having no pivot to bounce off of, right? It's been a while since we've had one on the 10-day, 30-minute that I could point to and say, look, we turned around and ran back up, but we didn't hit anything. But it's happened before, and we kind of have that situation going on right now, especially with what's going on with the dollar and US dollar Japan. So even though there's really no pivot point down around this 52.75 area for us to be hitting it and rebounding off of, don't be surprised if we do turn around and start running back up, even after not hitting something. Sometimes you can find whatever the inverse market was, but not always. We are getting another breakdown this morning in the Dixie, the DXY. We're not seeing agreement with US dollar Japan. Remember, if you're watching US dollar Japan, you're going to want to start watching the 10-year, the Bank of Japan's 10-year, not the US 10-year. And we have auctions today, which is going to mess with all of this, right? Especially the front end auctions. And we've got the 10-year trying to break up through that 10-day moving average. It's been a long time since we've had such a disagreement between the 10-year and the Dixie, right? A lot of times these two move in sync. So approach with caution, I guess, is the theme that I really want to just keep hammering the drum. Approach this entire trading week with caution. We have a new VPOC. We built one on Friday. So we want to carry forward this point of control only because this point of control has not been hit. That's not what I wanted. Yeah. Oddly enough, it's right on the round number 5,300. That's unusual to have all of the volume on the round number like that. Liquidity resides on the other side of the pivot. We would expect for that to be true here. But think about how price built that pivot point. That's the round number, 5,300. We came down into 5,300 and we went through it. There was the large volume. And then, of course, it tried to make a run for it, built even more volume, and probably built that VPOC. Still, it's a round number. It's just odd to see that much liquidity, the greatest amount of liquidity right on that number like that. I'll take it. It's just it's a little unusual. Hit some icebergs this morning around that 52.80 and then again 52.75. If you wanted to dig into that with more detail, Thinkorswim's got a chart called Monkey Bars. On other platforms, it's like a TPO chart or a footprint chart. You could dig deeper into those two icebergs. But just having the TPO on one side and the volume profile on the other kind of highlights for us this high-level volume nodes without spending a whole lot of time there. It's going to make it difficult to come back up through that 52.80. And think about how we paused at that 52.80 and it wasn't able to hold it, right? We bounced up, got a nice little pullback, usually like a 786 measure, and then dumped down again. So we're in the same boat as we were, just 5 points lower. looking for a little bit of a bounce, pull back into 786, and then a discussion on, another leg down, or if we're going to try to flip it and run it back up. So far, this zone doesn't look much different than the previous one. We're still above the 10-day, though not by much. And this range that we've been maintaining continues to hold true. So we really don't have much on the downside this year. Nothing really below, say, a 0.5%. But we haven't been able to sustain above 1.5% to the upside either. So this is just a very bullish backdrop, showing our relationship with the 10 this year. Bit of a pullback on the swing back down after having set a peak makes perfect sense. We're below a 0.5%. We can pause and let the 10 catch up with us, or we can just make our way back, complete the move down to the 10, maybe get a little bit of a reset, a nice little dip below before running back up again. We're still not expecting anything this deep, right? Like that we had back at the first week of January. But I mean, it's always possible. I want to see more about this coordinated Fed cut discussion first before I make any kind of claims about, a deeper pullback. We're still more than 3% above the 10-week, and that's extended, sure, but it's been extended all year. We're looking at QRA back here in late October, 1st of November. That brought us above the 0 line. We haven't been back down below that. And really, since we climbed above 2, we haven't been back below 2 all of this year. So maintaining this distance above 10 is what we've been doing, and really can't see it as overbought when last week we were much higher than this. Also, this blue line is a representation of movement volatility. We can see that volatility continues to elevate, even though if you go look at the VIX, it's not all that elevated, right? Just remember, volatility is a nerd word for movement. And this continues to show us that the movement, or the distance from 10, is getting bigger. How far the market can go from 10 before it needs to pause, consolidate, reverse, and go back to the 10. It's just a different form of measuring movement, right? Nat gas is down. Semiconductors are down. Technology, the FANGs, bonds. Well, bonds aren't down enough. It stops at the FANGs. The rest of these aren't hitting our benchmark. But having semis down and having the mag 7 down is kind of a big deal. You're not really going to get any rally with those two down. Now, they could flip, sure, right? They could flip and run it back the other direction. But look at something like the semiconductors. Over the last 5 days, they're still up more than 4.25, even after being down this morning, closer to 1%. Same thing with the FANGs. Over the last 5 days, they're still up 2.5%, even if they are down this morning more than 0.5%. So sure, I mean, they're down, but they are still holding on to a lot of gains from the last 5 days. Things that are up this morning, Bitcoin, more Bitcoin, the VIX, the FANG ETF for down, right? You got FNG up and FNG down. Gold, not quite there, but close enough. if this continues, then we would be at our benchmark. It's just a little shy of it now, but we got gold, precious metals trying to move in the right direction. So Bitcoin is not enough, but Bitcoin is tied directly to semiconductors. So if anything is going to break and we, come out of these lows this morning and try making a run to the upside, one of the first things I would be watching for is a change in the semiconductors. The nice thing about that is you can catch sweeps starting to come through, right? And that's usually a big heads up for me. Wellstream hits those sweeps that are semiconductors, and if I start seeing repeat sweeps coming in on semis, then I really start looking for more information about a V bottom or a failed bear flag where we can break out to the upside and start running back up again. So Bitcoin's a good start, right? If we're going to rally, that's what we want to see. It's good to see that pot stocks are up, but we can't rally with pot stocks, right? You're not going to get a sustained S&P, NASDAQ rip because we have pot stocks. So we need something more than that. Commodities are still doing really good, and that's not expected to change anytime soon. Whether you're looking at oil and gold, precious metals, copper on down the line, or if you want to get into more of like food and agricultural, commodities are still the place to look. But DBA, it's a lonely place. DBA doesn't really have a lot of peers. Nothing else that comes even remotely close. So if you're looking in the ag space, I mean, that's pretty much what you have. But it is up this morning, and that also isn't enough. But because we have Bitcoin up, we can start to get semiconductors up. And that just is part of that rising tide scenario, right? If you haven't seen it before, the relationship with crypto and semiconductors, this is my crypto watch list. Now, I put this list together by opening up a crypto smalls exchange product, right? The smalls exchange used to have crypto, and it was very similar to an ETF. So I opened the ETF and looked at what was inside of it, built my watch list based on it. And it wasn't a surprise to find things like Mara, GBTC, BITO, MSTR. Those are the obvious things, right? They're what you would expect to find. But there was also NVIDIA, Square, AMD, PayPal. Those maybe aren't what you would expect to find in a Bitcoin ETF. So with Bitcoin up, let's see if we can start turning around some of these semiconductors. If you start to see flows in those, it's another little bit of a heads up that we could get a V bottom, or at least, some kind of basing pattern and reversal in the S&P and the NASDAQ. Wouldn't surprise me if it comes in a little later in the day, say after the EU closes. On the other hand, if we are going to lose Bitcoin, say it's just a little bit of volatility, right? We've got a mild pop to the upside, because all things considered, this is pretty mild for Bitcoin. Then watch for it to fail. If we lose this Bitcoin, then we also don't have semis, and we don't have the FANGs or the Mag 7. We don't have any of it, and we just go to the other ADR line. So he finally announced it, huh? Thank you, Mont. There was just an announcement that Boeing is up because the CEO is stepping down. There was a lot of talk on Bloomberg about this last week after there was an audit, right? There was all kinds of things found that were wrong, and you know, the buck stops at the guy who's been getting millions and yearly bonuses, right? So not a surprise. So keep your eye on this. If we do lose the Bitcoin, we could get to the other ADR lower, right? Not an upside run, but a downside run. So just stripping everything off and putting an ADR line on here. The lower ADR is 52.41. If we lose Bitcoin and we don't even have that helping out, then, you know, instead of a rising tide, we'd have that falling tide scenario, and we could see a break through that 65, and then we'd start working our way down from there. That's not the base case though, right? Base case argument is we're going to come down into this ADR half, which is also the half back on this measured move. And we'll consolidate there, maybe wick through, right? Liquidity's on the other side of the pivot, so we could cut through a little bit deeper, get into the low 60s, and then either V bottom off of that or build a base down there that we hold, depending on what time of day we get down there, or we run back up again, or at least attempt a run back up again. The last of the options would be that we actually get down to this 52.41 today. But it is possible. We never want to say that price can't do that, because, oh yeah, it can do that. It's just not our base case argument. Still, we do have some plays. Bitcoin plays, they're already up quite a bit, but if we can get a little bit of a pullback, find something that has more than just this big, massive island gap to the upside. On a lot of these, we'll just use BITO here. We can use yesterday's or Friday's high. So it's better than nothing. Sorry about that. I'm pretty sure you guys didn't want me to sneeze in your ear. So at yesterday's high, 50.37, that'd be a nice little reset if we can come down and bounce off that. And you can see here on the lower time frame, it's got a 30-minute. If we're going to validate this gap up, that would be a nice way to do it. Kind of bounce off that 30.37 and then continue the run. And, you know, it's already up 5%, but, you know, being a Bitcoin product, it could certainly do more. If we break down inside of the 30.37 or inside of Friday's range, then we could focus on a half back. And keep in mind, this is a red to green, right? We closed down here at $29 and it gapped all the way up and is outside of Friday's entire candle. That's a very, very bullish signal. But can it keep it? Because if it can't keep it, it doesn't matter how bullish it appeared. The thing is, it is so bullish that it would be very shocking if it didn't keep it. But how much is it going to give back first? So one of the things that you can do is mark that half back level. And that use that as like a line in the sand. It really needs to stay above 29.5. Just do a little rounding there. I wouldn't even want it to get that weak, but if it does try to close this gap, then I don't want to see it cut below that 29.5. Otherwise, a nice bounce off of Friday's high. Maybe Friday's open around $30. It's a nice round number, and then a continuation to the upside. Now that's BITO, but it should look similar for a lot of these other ones. Mara, Riot, Hut. Look at Mara has already given back most of the gap up. And it never got outside of Friday's highs anyways. So Mara really didn't have much of a pop to the upside. Coin, it also never made it outside of Friday's high. MSTR, same thing. So Riot is looking a lot better. Nope, it wasn't Riot. Which one was it? BITO is looking a lot better. So the proxies really that's what that tells us. The proxies aren't making the move. It's just the Bitcoin right now. So that's useful too. We're seeing three camps. We've got the semis, then we've got the proxies like the miners, and then we've got the Bitcoin itself. If Bitcoin keeps the move and continues, then we're likely to see the proxies also start to run. That could be the start of the rising tide. We start to see semis come in behind that. Right? It's a bit of a chain reaction, a little bit at a time. But obviously, if Bitcoin gives it up, the proxies won't make it, and semis won't follow, and we don't get the rising tide. So just keep your eye on Bitcoin. It's easy enough. On pot stocks, I mean, MJ is not necessarily, you know, a fantastic ETF. And we do have some China ADRs with the K-Web popping up a little bit here. It just moved. China ADRs generally reflect in things like JD. Getting a little bit of a bump there. PDD. Yeah, it's working it out. Baba. You know, Baidu had some crazy moves last week, but Baba still really weak compared to all the other ones that we just looked at. And then Baidu. So that big move Friday. And then, of course, it gave it all back, but that's still a wild move. And it's trying again. And all of the, it's got a lot of work to do, right? A lot of work. Let's get above that year to date VWAP first. We got that anchor here year to date. And it seems to be a level we're really fighting against. So let's get above that. And then, you know, really let's get through that 110 and keep it. This could be the start of a swing trade that works its way back up through all these levels, but there's a lot of work to do before we, you know, get to the point where that's a viable option. I don't have the 200 on here, but we're still underneath it, and you could almost visualize that it's a down sloping 200. So I'm not exactly sure where it is, but it's not hard to find it. Yeah, this is a daily. There's the 200 in purple, and we're easily below it, and they're down sloping. So it's not going to be some, you know, reversal and run back up right away. There's a lot of work to do. Even on a weekly, we've got a down sloping 200. But for a day trade, certainly find some opportunity. Get outside of Friday's range first. So we're getting some China ADRs, and we've got Bitcoin. So it's better than nothing. Gold miners. So some precious metals and commodities. Yeah, for the pot stocks, this is my list. It's not a really great list, but kind of gets it done. Tilray's down, which is odd, but Cron is up. CGC and ACB. It's just weird that Tilray's down. So we'd want to see this turn around a little bit. It's been some wild moves. Might have a bit of a short squeeze going on here, getting hit. I don't know Kara. it's worth a look, right? Kind of keep your eyes on the pot space. So this is not the kind of day, right, where you're going to see a nice rally in the S&P and the NASDAQ unless we get finance, semiconductors, technology, right? We need those to turn around. And without it, we can hold the line maybe, but hard to see a rally. Everybody be careful, be safe. I will see you.